You're doing your own bookkeeping. You're filing your own tax returns. Do you need to hire an accountant? I'm Mustafa, I'm an accountant, and most people get this timing completely wrong. Look, I'm not here to tell you that every single person, every single business needs an accountant. If you're only making 15k in profit, keep that money, spend it on yourself, or reinvest in the business. But there is a point where DIY accounting starts costing you more than what your accountant will typically charge. Now here are 5 signs that that point has arrived. Sign number 1, if you're making over £50,000 profit. Why £50,000 you might ask? It's because at this level, proper tax planning typically saves you more money than what your accountant will cost. So if you're still DIYing at £50,000, you probably don't even know about the optimal salary or dividend split, capital allowances versus the trading allowance, any pension contributions and how they contribute to tax relief, what proper expense claims look like, and potentially when to incorporate your business. So the result of all of this, you typically end up overpaying in tax by around £2,000 to £5,000 a year. Now with a proper accountant at £50,000 profit, they may cost anywhere from £1,500 all the way up to maybe £5,000 for the year, but they typically get you that back, and maybe in some cases put a little bit extra back in your pocket too. Now the second sign is that you're spending 10 plus hours a month on your books. Now let's do the maths on this. If you're spending 10 hours a month on your books, that's 120 hours a year. Now typical businessmen like to put their hourly rate at around £50. So that's £6,000 worth of your time. Now a bookkeeper may cost you anywhere from £150 a month to £300, £400 a month. That's around about £4,000 in the year. So if you handed that job off to someone else, you're probably better off. But there is a bigger problem to all of this. Now those 120 hours that you've sacrificed to spend on your company's books, they could have been instead spent earning money for your business. You could have been doing marketing, you could have been doing outreach, you could have been doing some client work instead. So if you could build those 120 hours at £50 an hour, that's an additional £6,000 revenue you're missing out because you're doing your own books. So the typical rule is if it takes anywhere more than 5 to 10 hours a month, just outsource the job itself. The third sign is that HMRC has sent you a letter and now you're panicking. Now these letters, there could be a whole range of letters. Typically what we see is that there could be a tax inquiry, a penalty notice, a we've noticed something letter, or even a late filing reminder. Now once you've got this letter, your first thought immediately is going to be, I don't know what to do. Now here's the truth. You don't even know how to handle HMRC correspondence because you've never been trained in doing it. So you need an accountant, not next month, not once this case is finished. You need it now because HMRC letters, they typically have deadlines to them. And if you miss them, then it's going to cause you even bigger problems. So most letters that you typically get from HMRC are just routine letters. But when you get those letters, you need to know what they're actually asking for, how to respond properly, what documents to potentially send them, and also what not to say. An accountant like myself deals with HMRC daily. We know how to respond to them. You deal with HMRC maybe once every few years. You ain't got a clue. So if you've ever received a letter from HMRC and your brain just thinks, I don't know what to do, that's a sign. Get an accountant. Now the fourth sign, you're thinking about changing your structure, but you don't know how. Now examples of this could be a sole trader thinking of going into a limited company now, or a sole trader thinking of taking on a partner, maybe a limited company thinking of hiring new employees, or any sort of structural change. If you're asking questions like, should I incorporate? When should I go from sole trader to limited company? How do I add a business partner? What's the tax impact of hiring someone? Then you need an accountant because these questions aren't answered by your typical Google search. The wrong structure could cost you thousands and the right structure could save you thousands. So it's very important you get this right. Now the fifth sign is that you're too scared to claim legitimate business expenses. I see this constantly. People won't claim certain expenses because they think it's dodgy. People won't claim their home office expenses because they're scared HMRC will question it. They won't claim mileage because they're not sure if the journey even counts. They won't claim their phone or internet bills because it's partly personal use. And they'll completely forget about training courses. And even if they do remember, they're not sure if it's business related. So they end up claiming absolutely nothing. And they overpay by tax, typically by £2,000 to £5,000 a year, as I've mentioned before. Now here's the truth, most business expenses are legitimate, but you do need to know what you can claim, how much you can claim, and what to document should anyone ever ask. Now, if you're scared to claim any of these things, you're leaving money on the table. An accountant will give you confidence in whatever you're claiming. Now look, if you've identified with 2 or more of these signs so far, and you're ready to stop overpaying tax and you want to ditch the whole DIY process you've got, click the link in the description, book in for a call with me. We'll review your whole situation and work out if hiring an accountant will even work for you. And look, if it doesn't, I'll tell you that too, openly and honestly. There's no pressure in this call, just honest advice from me. Now let me be clear about when you probably don't need an accountant. If you're under £30,000 revenue or even £15,000 profit, then it's typically going to cost you more to hire an accountant than it will in the tax saving side of things. You're better off using that money to go and grow your business instead. If you've got very simple expenses, one source of income, generally very small or limited amounts of expenses, if you've got a straightforward situation, then you're probably better off just managing the books yourself. Now, if you're testing an idea, checking if it'll work, making around 5 to 10k annually, then don't waste your money on an accountant just yet. Build traction in the business first, build some sort of brand value, and then come see an accountant. But even though I've said all of that, here's the key. If you're doing DIY stuff, you need to be good at it. Now, I don't mean just good enough to file a return. I mean good at it. You need to know what you're doing. You need to be good at tracking every single expense, knowing what's claimable, understanding tax deadline, planning for any tax bills, and keeping proper records. And if you're not doing all of those things, you're not saving any money doing DIY. You're just overpaying tax in a very different way. So if you're watching this thinking you've now outgrown the DIY accounting, you now have 2 options. Option 1, keep doing it yourself, keep paying more tax, and keep being unsure whether whatever you're doing is correct. Or option 2, get help now. Click the link in the description, book in for a call with me, where I'll review your whole situation and work out what you've been missing in all these years. We'll review your numbers completely, and honestly, if an accountant is something that you need, I will tell you personally, and if it's not, I will also tell you. Because here's the thing, I'd rather be honest and sell you something that you need than sell you something that you don't. But if you are making 50k profit and you're still doing DIY, I can almost guarantee you that you are leaving money on the table. So click below and let's find out exactly how much that is.